let's start with this first article.
So,
it just says it all. Right
so
there,
this is a great segue. So mortgage rates slingshot higher as tariff uncertainty roils markets. So we saw this firsthand sitting in the front row seat, guys. When the whole tariff thing like kicked into place, like the mortgage market like just plummeted, rates tanked, but it was very short lived. And that was like that Thursday, Friday, the first week in April. And then you come back to the week, the full trading week. And now it's like rates are higher. Oh, they're higher again. They're higher even more. And they're higher than where they started before the tariffs. So
Absolutely.
Now we have an issue where there's like this whiplash. So like, what are you telling people right now? Because I know last show we talked a little bit about like, hey, God, this is the reason why we keep telling you be ready so that on the day when it is low, you can strike while the iron's hot. Okay, well, you missed it if you didn't do it. But now what do you do if we're in this elevated rate environment, guys?
Again, it's very difficult, Andy. We have clients texting us and telling us, hey, we saw your podcast, rates are low, can I refinance? Well, guess now what I have to tell them? It's not. And I love right here how it starts with the article.
When you got the email,
Yeah. And here's the article. Mortgage rates are now about where they were and have been for the past 6 weeks. We're back. It's just that. It's that quick. And that's what all these tariffs, everything that's going on, it has a huge impact and influence in what's happening to our interest rate market. Even though we did see, the CPI and inflation go lower, we saw that normally when we see that data, we see interest rates in our favor. This time around, we have been getting hit. We started this morning at 79 basis points worse.
Right. So what that tells me is typically without the tariff conversation on the table, if inflation comes in low like that or negative, meaning it's actually going down, not slowing down, but actually going down, this is the negative number I've been talking about, guys. For how many years have I said, don't tell me inflation's going down until there's a negative number? This is not what I'm talking about.
I thought about you this morning.
When you saw it was like negative 0.4 CPI. Andy says negative. Yeah. That's what I'm talking about. But I'm not trying to get distracted. What I'm saying is like the indication here is that the sentiment about what's happening with tariffs is way outweighing any good information with inflation, which has been the problem for like 4 years. Yeah. So even though that's been like the biggest behemoth of the entire thing, the tariff thing is still even way bigger than that in this window of time.
Yeah. Going back to the influx of refinance calls we got just last week. One of the things I would advise right now, if you're looking to refinance, if you've been noticing the market, is we have these drastic drops, and it does take time for things to come back up, but they do come back up, and we saw that pattern a few times last year. Although maybe they don't go back to where you want them to, but the advice here is get in, run your numbers, see what that looks like, and sit still if it's not somewhere that that you want to be at. What that gives you, it gives you the opportunity to see where you started, but also follow the market as it's shifting and moving, so that when the time comes and the rate is where you want it to be, you can actually lock it in and not have to wait, send your documents in, and at that time, by the time you want to lock, the rate's not even there anymore. It's just completely gone.
It's too late.
On the flip side, if you're a buyer trying to make your way in and break into this market, it's the exact same thing. Get your reps in there, get out there, see what the open houses look like, ask a lot of questions, what the sellers are looking for, what the motivation is, what negotiations are available in the favor of the buyer to be able to strategize a good offer and have the opportunity when the time comes. But if you're looking to buy a house a week out to get pre-approved, you're already months out,
like a month late
behind. Yeah, exactly. So my advice is, if you're looking to make a move in 2025, stay ready, get ready, and move very quickly.
Yeah, I agree.
So the question that is posed kind of in the article, and I'm going to bring it up, and I think I know what you're going to say, but I don't know if it's changed since I asked last. It's like, if you had a 5-year time horizon, do you think someone should still buy a house this spring and summer? Yes or no? And why?
If you can.
Okay, why? Go ahead.
Well, we understand that purchasing a home there's a lot of value into that already. And so especially if we're heading into a recession, we'll start seeing interest rates drop. Right. And so if that's where we're going to be heading and you're able to buy now, you already can foresee the light at the tunnel that you're going to have a much lower interest rate as we move forward, where it's going to put you in a favorable position to be able to maintain your payments. So absolutely. And again, we're talking about it, and I know that the next article is going to talk about, whether buying a home or a stock is better. A home's always going to outperform your stock. It's more predictable, to have a home, understanding the appreciation in the area, or what that's going to do, what's that going to look like long term. It used to be that we could look at things over the next 3-5 years, but nowadays it's longer than that. I'm going to say more like 8-10 years. So you could start reaping the rewards of your home equity.
You know, I'll take a different approach. In the last 5 years, have houses got any more affordable?
No, they got more expensive.
And do we think that they're going to get more affordable as time comes?
More affordable, possibly, but that's like that rate and price conversation.
Correct.
So I think I'm getting where you're going, and I have a response. Go ahead.
Right. What about values?
Values are going to go up. Long term, they're going to go up.
So if we notice that everything's been going up and significantly since we started taking track of, prices of houses, I feel that if you're in the position right now and, you're able to get your needs and not your wants, that's going to put you in a better position so that when the time comes around and you want to get what you want, you're going to be in a better position because you can leverage that one property that you got into right now to then, jump from that one or utilize that one to get your next property that can have all the things that you want.
Yeah. So where I kind of meet in the middle of what you're talking about, guys, is like I was thinking about this. I'm looking back at like 2020 and 2021. Right? Did we really foresee that we'd be locking rates at 2.25% for VA and 2.5%, 3%? Like even 3%, people are like 3%. Why isn't it 2.5%? Like what? Looking back in the rearview mirror, like, dang, I take 3% all day. I take 4% all day long right now, right? Okay, but so here's the idea. Well, so if you buy a house now, and let's say your rate is 7%, okay. Well, if rates go lower, well, then you have the house to refinance to a lower rate later.
Correct.
But if 7% is where you're at now, and rates in 5 years are higher, then you now do have the lowest of the time frame. So when I look back and I think back about the people that are like, 2.5%, 3%, like, well, if I'm looking at 3, what if it goes lower? Cool. If it goes lower, you get lower. But if it goes higher, you ain't gonna see that 3 again.
Yeah.
It's just that was such a shockingly low number that I think people don't necessarily apply that same thought process. Now it's 6.5, 7, when it's the same idea. And so the whole concept of, hey, if you're trying to buy a house, just buy a house. This is what I'm trying to meet with you guys in the middle. You're trying to buy a house, just buy a house because it's either going to get cheaper later on the rate, like your point is, and it'll be less expensive or total out-of-pocket cost. Or if you are going to have a higher rate environment, well, at least you still have the house and you got your lowest of the time window that you bought rate, and the value will carry you into the future.
Absolutely.
So I'm 100% on the side of buying, obviously, but I don't know. I think that the variety of conversations you have, because you have two completely different demographics age-wise that you tend to talk to between the two of you. You also have a lot of people who are on the edge of savviness, and they're like, oh yeah, I'm trying to buy my second, my third, multiplex. I'm using my VA for my second, third, fourth, fifth time, whatever. And then you have people that are just starting out buying their first house, like, what do I do? What? So there's a wide variety of this conversation happening.
Absolutely.
So that's why that's the curiosity coming from me today. And then as we always talk about with people, like if you are in the preparation mode for buying a house, there will be a day where the market's in your favor and these guys are going to be like, oh, you should lock your loan today because this is what's happening. We don't know if it's going to happen again, and just go ahead and take the offer. It's on the table. Bird in the hand is worth 2 in the bush. Yeah. Take what you get, right? So, continue working on your credit, continue working on your income, continue paying down debt, continue saving money, continue all those things that are healthy financial habits to prepare yourself for the pending purchase that's ahead.
Yeah. Totally. One of the things I want to bring up on this article, it says last week, the 30-year fix dropped to the lowest level since October after President Donald Trump announced global tariffs. So we used to not really see that huge freaking influence in interest rates, but I really think the reason why things are happening at a much faster rate right now is because we know when this guy says he's going to do something, it's happening.
Yeah. Well, the implication of it is huge, right?
It's
so
huge.
The economic implication is, on one side, like flashing red light, on the other side, opportunity ahead. And there might be a disproportionate weight of those two things, but clearly the markets were taking the threat seriously, if you will.
It is. And, just making sure that he hired the Secretary Scott Bessent, I mean, he looks like a genius.
The Secretary of Treasury, Scott Bessent? Yeah. What's funny is I was listening to that guy even before he was like, I don't know how I found him. I honestly don't even remember. But when he was like named, I was like, oh, I know that guy. Like I've listened to his economic theory and all that. And I'm like, wait a minute, this guy's actually is pretty solid. Again, but all politics aside, I'm like, even myself trying to poke holes in the concept and the theory. And I was like, oh, wait, actually that makes a lot of sense.
That was when years ago, him and Soros, they tanked the UK market. I'm not sure if you recall that.
Yeah, no, I know about
so
that.
This guy's just a genius, right? So having him in our side, making sure that the economy doesn't tank, that's like that extra layer of security that we have by just having this type of person there.
Yeah, we're gonna have a split decision on people who love or hate George Soros on our show.
Well,
but
this is not him, right?
Scott Bessent
totally
part,
different. Bessent.
Yeah, that's what I'm saying. But the Scott Bessent part, it's like there are certain economic theories that you see play out in capitalistic societies that work and then that don't work, and then history repeats itself and proves that certain things are better. There's no perfect system, first of all, number one, and there's no perfect solution. It's just some solutions are more painful on the broader base, and then there's solutions that are more painful on certain select parts of the base. And there's always an ebb and flow to that. Touches us all some way.
Touching bases on what you just said, and I'm no expert on policy or laws, but one of the things I'd noticed as a regular everyday person is that when they mentioned tariffs and they enacted tariffs, the 10-year yield tanked.
Yes.
And for everybody that's been following our show, we know that when the 10-year yield tanks or drops, that signifies that rates should be falling along.
Yes.
Although we didn't just see that yet this last couple of days and weeks, but that's just to show you and foreshadow that things are happening, the pressure is there, and I'm very confident. You could give me my meter right now that rates in these next couple of weeks and months are going to retract and slowly start following suit along with the 10-year.
Yeah.
I honestly think that whatever happens between the negotiations of the United States and China is going to set the temperament. I'm saying temperament on purpose. It's going to set the temperament, therefore the temperature of the markets in the bond side of things, because we're not getting away from the national debt conversation. That's still going to have to be addressed, and it's going to be harder to address when rates are high versus when they're low.
Yeah.
So ultimately, whether there's tariffs or not tariffs, or there's policy and not policy, that's still coming to a head and will have to get addressed. Yeah. But I think that the temperature and how am I trying to phrase this? I'm trying to say like how rocky the waters are going to be is really going to come down to what happens between China and us when it comes to what we're tariffing each other on.
Don't be surprised if we have another type of virus, right?
Yeah. Okay. Hold on a second.
One last thing though. I think
off the rails.
The partnership between Trump and what is his name, Bessent?
Yeah,
Bessent. Okay, so the relationship between them is very unique because I feel that Trump is more of the driver, that he's the visionary, saying, "Hey, we got to go do this, and that." He's the voice in the speakers and talking that. Whereas Bessent, he's an implementer. He's going to go and take what Trump says and actually implements it into the government in a way that isn't as crazy as he portraying it out here.
Correct.
Yeah,
but then again, we're just gonna have to wait and find out.
I will say something that and then this is just maybe it's me more in my personal capacity. What is very discouraging is that I see some of the things that they're mechanically doing that do cause better outcomes for all being labeled as really malicious when they actually aren't. It's a very disingenuous way to try to black label an action that ultimately is going to help, but it's kind of like it hurts at first. Like if you have to re-break your bone to set it in place and it eventually heals, the re-break hurts, but eventually the arm heals and it's functional again. And that there's some of that that's happening, and people just don't want to be honest about it. That's the truth. People just don't want to be honest about it.
Schumer and Pelosi wanted tariffs.
Well, okay.
Let's go on to the next subject, please.
Oh God, I'm trying to avoid the controversy of it.
I'm trying to get into it, but because I think people will enjoy to see what their point of views are.
Yes and no. But my point is the disingenuous part is that people that don't like have these conversations or honestly research enough to understand the mechanical part of it, you're just being fed something that's not true about what the function of it is and the outcome. So it's like, oh yeah, well, they're going to break your arm again, and then your arm's going to hurt more and longer. It's like, no, that's not it. Don't say part of the story without telling the other context of it. That's what bothers me.
In that perspective, I totally agree. But then again, curiosity kills a cat. You put the information on there, and then people could go and do their own research as well and make up their own decisions. So I also think that's fair.
So Brian's basically just telling you all, go to chat and ask your question. Okay, next topic. We're going to end on the chat GPT. Okay.